Well, I did talk about it yesterday. I did mention that reports frequently come out in the morning that mean that if there is a late day move that happens that does not complete, it may not necessarily continue in the morning. It is very telling even when it does, okay, but it often doesn't. And it turned out that the day was such a day where it didn't. Okay. Not only did a report come out this morning, it was one of the more important reports, the monthly GDP report, the Gross Domestic Product report, okay, in effect the report of how much the economy has grown over the previous while. And although a lot of the report was not good, there were some parts of it that were not terribly bad and apparently better than expected. And the Wall Street traders, always looking for good news, of course focused on the parts that they liked, and the market exploded higher. Okay, it went way beyond where it was yesterday. As I noted, the move down yesterday did go down, but it did not go down a lot. Okay, and the explosion higher this morning, and went way beyond that downturn to the upside. Okay, but I will also note that the way it ran over the course of the day today was an absolutely classic looking bear market bounce again. Okay, in fact, the most classic looking kind of all, because there are basically two different kinds. There's not a lot of variation between the two, but it is discernible if one looks at the one kind versus the other. The one kind is where it explodes upward and then basically just goes flat sideways across for the rest of the time it keeps going before it starts going down again. The other kind is the kind that explodes upward and then goes sideways across with a slight but discernible upward bias. In other words, it keeps going up more, just much more slowly than before. That's what happened today. There were a couple of kinks along the way, but the traders promptly made up for it again over the next few minutes. At the very end of the day, it started going down again, but not nearly as much as it even did yesterday. So there's no telling at this point yet what that means. The point being that what happened today is that the traders once again did what they like to do best, which is, even if a report is overall not great, which this one was not, they tried to look for the so-called silver lining, and when they found pieces of it that were not bad, they basically said, hooray, let's celebrate. This is not unusual, by the way, it's quite typical. Okay, my point simply being that we most definitely got another bear market bounce today, and it certainly has the form of one as well, okay? But the market did explode higher. The Dow went up several hundred points in the process, okay? And the S&P 500 definitely made it above 4,000 in the process. Again, to remember, I think I said yesterday that it almost made it to 4,000, but not quite. Today it made it above it in no uncertain terms. Okay, well above 4,000. Not to 4,100, but well above 4,000. That's a pretty significant move for the S&P 500. Okay. The thing to bear in mind is that this is probably, I mentioned in a previous video that bear market bounces can have 1, 2, or 3 steps. There's never been one with 4. Part of the reason why is, as I noted in that video, probably because bear market bounces with 1 step are far more common than bear market bounces with 2 steps, and those are far more common than bear markets with 3 steps, which are very rare indeed. They are so rare that, in fact, in other words, that's happened so infrequently that a bear market bounce with 4 steps, the likelihood is so low that it has never actually happened. There's no documented case of one ever in history. Okay, and 3-step ones are very rare to begin with. Okay, the bounce today went higher than the previous one. This may well be the second one. and it might not be over with yet. There was no solid indication at the end of the day that it was. Okay, so and then tomorrow is Friday, which means they may well hold the market up simply because it's Friday. That's not unusual. Okay, so you know, the bottom line is this could go for a little while yet. It may not go a whole lot higher, but it could go on for a little while longer. Okay. So we'll just have to see what happens in that regard. The main reason I'm doing a video today is just to point out that despite the fact that the market exploded higher, okay, it was in fact in the form of a bear market bounce, an absolutely typical one, okay, and so it cannot be expected to last. Again, a true bull market starts out slowly and ends with a bang. A bear market bounce does the opposite. It starts out very quickly and ends with a whimper. Okay, it slowly rolls over. Slowly, relatively speaking. Okay, it most certainly does not end with a bang. Okay, and so, you know, we'll just have to see how much longer this goes. The one other thing that's going on in no uncertain terms, okay, and I realized that as soon as I saw what was going on this morning, among other things, and I say the traders were looking for any silver lining they could find. They normally do that anyway, okay, but even more so this time around, I think, because on a day-to-day basis, they just barely avoided going into official bear market territory by the conventional standards, the conventional measure in the stock market, and on an intraday basis, they actually went below it. It's just they managed to recover it before the end of the day, so it didn't close below those levels. So they already hit that level. They well know it, and they are doing everything they can to get away from it again. Okay? So with that additional incentive in there, it's not exactly a surprise that they did what they did today, since the GDP report didn't come out entirely negative. Okay, I suspect pretty soon they will, but that has not happened yet. Okay, ultimately the bottom line is, in the end, the traders always do have to deal with reality. Okay, but they're doing everything they can so far to try to avoid that in the hope that it'll go away, that the situations will go away. That's always their hope. It's when it in the end doesn't that they end up having to face a reality, and down it goes. Okay, not unlike what's happened lately, where it's gone down so far already when they had no choice but to face reality. But whenever they have the possibility of not doing so, they do exactly that. Look for the silver lining and go up. Okay, especially when they've just almost effectively hit and almost officially hit the bear market territory. Okay, that does not make them happy. Okay, one quick note yet, basically the same thing happened in the German market, that the market went below 14,000 there too. Tried to even close below that level once or twice along the way here lately. Held it just above that in the last day or two, and today the market, the German market, also exploded higher to get up to around 14,200, also desperately trying to get away from those lower numbers. We'll see how long they can hang on to that. I suspect not much longer, but have to take it as it comes, a day at a time, in part because the law against recessions mentality that originated in the United States decades ago has since been incorporated into the way of thinking and the way of doing in most other industrialized countries as well, including Germany, so they are pushing just as hard as everybody else to avoid that situation. In my opinion, they're not going to be able to long term, but for now, that's what's going on. So we'll see how long they're going to be able to hang on to in that context. So anyway, we'll see what happens tomorrow. I may or may not do a video depending on what happens. Then of course the weekend comes where there's no trading anyway except in currency markets, including crypto. Those are 24/7, always have been. So I may not do a video until next week again, depending on what happens. We'll see.